maybe they shift their target towards more of a core element that we're looking at this point in time, and that gives them maybe a bit more leeway around these cuts. Because what you're already seeing from the Fed, of course, is a bit more of a commitment to the employment mandate, and maybe that starts to colour what the BOE says as well.
I think there's a number of other points here that we need to consider. A, wages are still enormous pressure to push up wages for those that haven't had the big kind of pay hikes that we've seen. And the second thing, of course, is the vulnerability of the global economy to energy prices. Now, everyone is kind of relaxed about energy because oil prices have been coming down. But there are two major things changing. I love, you said you don't like predictions. This time of year is the best time of year because people come out with outrageous predictions. My favourite being Saxo's, but some folk think that oil could go back up to 150. And what we're seeing with Ukraine, with the Republicans rejecting further aid, could mean pressure on energy prices in Europe again, if that really feeds through.
And that's a really interesting point, Bill, because that came up in RBC Blue Bay's report recently, and they've got prediction too that if inflation remains problematic in the UK, then there is a risk that Bailey and his mates might restart a new tightening policy.
I think that's unlikely just because of how vulnerable the economy now looks, how soft. Yesterday's numbers caught everyone by surprise, and they really do sort of focus your mind on, is anyone running the country at the moment? I mean, that's a political debate for a different time. I'd love to have it. But I think the upside risk of rates is more limited. But will they come down? I'm more hesitant.
And that shrinking of 0.3% of the UK economy was worse than the flat number we were looking out for. Chris, do you think this might mean that perhaps we could see more pressure on the Bank of England to cut, and therefore there might be more pressure on sterling going forward?
It's possible, I think, really. It's the weakness of the UK economy is a sort of well-known fact, really, and that's where you'll probably see indeed more almost political pressure applied to BOE, really. So it's something that we could watch for in the next year or so, is the poor performance there.
We're just getting the headlines crossed right now, and as expected, the Bank of England keeping rates at 5.25%, and we expected, the Reuters poll showed 3 voting for a hike and 6 unchanged. That was bang in line with expectations. So some early thoughts from you, Bill?
Well, quelle surprise, as they say. I mean, actually talking about the fact, no surprise at all there. I think that sums up where we are. The fact that there is still upside pressure towards rates is maybe surprisingly stronger than we thought. But no reason to change the perspective of the Bank of England at this point. Wait for rates to be affected by either a real slowdown in the economy, and I do worry about yesterday's 1% decline in manufacturing, and wait to see how sticky inflation proves to be. Rishi Sunak is out there dancing around claiming that he's personally reduced it. I wonder if he's right.
Chris, we're seeing quite a move there on cable.
Yeah, recovering, as you might expect, the Bank of England very much pouring cold water in expectation of any cuts next year, in contrast to what the Fed says, as we probably could have expected them to say that. So that's given the pound a boost against the dollar in the short term. That's the 2-minute chart, really. So we're seeing about a 30-point gain for the pound against the dollar in the short term. If we put that in context of what we saw last night, of course, the pound is a big boost against the dollar. Since last night, we were down at 125 and now at 127. So I think that really solidifies a higher outlook for the pound against the dollar for the time being, which of course is another form of policy tight anyway for the BOE. It's almost doing their job for them in another sense.
Many of our IG clients love trading cable. They also love trading a lot of UK listed financial instruments in terms of equities. The FTSE is mainly an international index, but given where sterling could be headed next year, where do you think investors, Bill, should be putting their money?
That is, of course, the $64 trillion question. I mean, UK equities have their attractions, but the bottom line is next year, the UK is going to be caught in a kind of a trap. It's going to be waiting for an election. We're going to have continued questions about where does sterling go? We're going to be worried about where rates are going. And there's this whole issue of politics hanging over everything and the vulnerability of the economy to the geopolitical markets. In contrast, we've got a US market that is strong, that is vibrant. It does have an enormous political threat coming up on November the 5th with the elections. I think it's November the 5th. With the elections coming up, that is going to be something that possibly starts to weigh on the market. But the fact is, the US market has much more capacity for upside in the stock markets, and I think that is going to remain the case next year. There are two, even though, as you correctly say, the broader index is a foreign index, when you're looking at UK companies, it's hard to find these companies that are not going to go and look for a higher valuation in the US.
Chris, a final word from you?
Tough times to be away next year. I think you'll face a really difficult outlook. And a mixture, as Bill says, of politics and monetary policy, which is going to put a lot of pressure. And with the Fed loosening, gives more upward impetus to the pound as well, which adds to the tough times for the UK economy.
Yeah, makes it worse for the UK economy.
Right, thank you very much. I have to leave it there. That was Chris Beauchamp from IG and Shard Capital's Bill Blaine. Just recapping, the Bank of England, as expected, kept rates at 5.25%. We're seeing sterling extending gains after that decision, and also euro sterling down around 0.1%. Do stay with us and tune back in. We'll be breaking all the live analysis to the ECB reaction on Beat the Street with myself and Chris Beauchamp at 13:30. I know the ECB is out a bit earlier than that, but we'll be getting the analysis for you on Beat the Street. This is IGTV.